Oil surged 9% in a single session. The semiconductor index dropped nearly 5%. And the most important inflation number of the month lands in 17 hours. If you're new here, hit subscribe. The free weekly market note is linked in the description, no paywall. Monday was the kind of day that punishes complacency. The S&P fell 0.79%. The Nasdaq dropped 408 points, or 1.55%. The Dow lost just 0.26%. That divergence tells you exactly what happened. Anything tied to chips and AI got sold hard, while energy and defensive names caught a massive bid. The Philadelphia Semiconductor Index plunged 4.78%. SKHY, the IPO everyone chased last week, fell 9% on its first official trading day. Textbook sell the news, which is exactly what we warned about. Marvel and IRM dropped 7%. Intel fell 6%. Micron and AMD lost 4%. NVDA dropped 3%. The catalyst wasn't just chip profit-taking. Two things broke over the weekend and into Monday. First, the president formally notified Congress that military operations against Iran are back on, and announced a naval blockade enforcing a 20% transit fee through the Strait of Hormuz, starting 4 p.m. Tuesday. The strait carries roughly 20% of the world's oil. Second, a Korean brokerage downgraded SKHY earnings estimates by 8%, saying HBM pricing is slowing relative to conventional memory. That call sparked a 15% crash in SKHY Seoul shares and a 10.5% drop in Samsung, triggering exchange circuit breakers in Korea before the U.S. even opened. That's why oil closed at $78.14, up 9.4% on the day from $71. WTI didn't just rally, it gapped higher and closed at the high of the session. When the Strait of Hormuz is threatened, the market doesn't wait for confirmation. But here's what matters technically. On Friday, crude was trading below every single moving average, with the long-term trend sitting near $79. Monday's candle drove price right into that zone. That's a breakout attempt, not yet a confirmed breakout. A close above long-term resistance is where an oil trade goes from interesting to urgent. Now the charts that matter for your Tuesday. Chart 1, NVDA. After last week's heroic recovery from $189 to $211, Monday's 3% sell-off brought price right back to the midterm trend support near $206. This is the line. If NVDA holds above $206 through CPI, last week's buyers defended the level and the bounce structure survives. If it breaks $206 on a hot CPI print, the next stop is the long-term trend around $197, and the entire recovery narrative is at risk. The hourly chart from Monday shows steady selling most of the session, with only a minor bounce into the close. Not exactly strong hands accumulating. Don't buy the dip yet. Let CPI decide. Chart 2. OXY. This is the one that actually worked Monday. With WTI up 9%, Occidental Petroleum gapped higher and finally broke through that long-term, mid-term resistance cluster we've been watching between 54 and 55. We've been saying wait for $50, $51 for weeks, and the stock never got there. Oil made sure of that. The question now isn't whether the breakout happened, it's whether it holds. Breakouts on geopolitical headlines can reverse just as fast if headlines cool. If OXY can pull back and hold $55 as new support, the next leg targets the upper channel. If it fails back below $54.55, this was just an oil spike headline fake out. Wait for a retest before chasing. Here's the Tuesday playbook. 8:30 a.m. EAT. June CPI. That's the entire show. The setup is brutal. A hot number on top of $78 oil and 4% inflation fears, and the chips are already down 5% in a day. A cooler number could spark a relief rally that flushes the shorts who sold Monday afternoon. But you don't guess on CPI. You don't hold a large position into a number this binary. The Hormuz blockade enforcement starts at 4 p.m. Tuesday, well after the CPI print and after the close. That means the market gets the entire U.S. session to digest CPI before the next geopolitical shoe drops. Don't assume you know how that goes. Risk board. CPI hot, sector chips lead lower. NVDA, $197 next. CPI cool, sector relief rally, but oil strength caps the optimism. SKHY breakout, sector real only if $55 holds. SKHY contagion, Sachus, if Korean memory names keep crashing overnight, U.S. semis gap down regardless of CPI. And cash is still a position, especially the night before CPI, with a 4 p.m. geopolitical deadline waiting after the bell. Trade the setup in front of you, don't predict. Wait for CPI to tell you what the tape is doing. Protect what you have. Trade safe.